All right, let's jump right in. Have you ever wished you had a kind of mood ring for the stock market? Just a simple way to tell if everyone's panicking or if they're getting way too excited? Well, that's exactly what we're breaking down today, the Finstill Fear and Greed Index.
It's the oldest question in investing, right? Are markets these perfectly logical machines driven by cold, hard numbers? Or are they really just a big crowd swayed by two very, very powerful emotions?
Fear and greed. When fear takes over, people just sell. Well, they sell everything, even fantastic companies, and that can create some incredible discounts. Then on the other side, when greed is running the show, investors pile into anything and everything that's going up, and that's how you get bubbles. The key thing to see here is that both of these extremes can actually create huge opportunities, if you know what to look for.
But, and this is a big but, here's the trap so many people fall into. Just going by your own gut feeling, that's a recipe for disaster. Your personal fear might just be a reaction to some scary headline, not what's actually happening in the market. To make smart moves, you need a way to measure the real mood out there, objectively.
And that is exactly where the Finstill Fear and Greed Index comes into play. It's a tool built on data, designed to cut through all that noise and give you a clear, straightforward read on market sentiment. So here's how simple it is. It all boils down to a single score, updated every day, on a scale from 0 to 100. If you see a 0, that means the market is in an absolute state of panic. 100? That's pure, over-the-top, irrational greed. Simple as that. Okay, so you're probably wondering, how does it come up with that number? It's not just pulled out of thin air. Let's pop the hood and take a look at the engine that makes this thing run. The Finstill Index actually combines 7 totally separate signals from the market. We're talking about things like the VIX. You've probably heard of it. It's the market's fear gauge. And stuff like the put-to-call ratio, which tracks bearish bets versus bullish ones. But it also looks at things like the stress in the credit markets. Each piece gets its own specific weight to build out the final picture. And this chart really gives you a feel for that blend. You can see volatility gets the biggest slice of the pie, but there are a bunch of other components that carry a really significant weight too. That diversification is what makes the final signal so robust and reliable. Now, you may have seen other fear and greed indexes out there, but Finstill has something unique baked into its formula, kind of like a secret ingredient that acts as an early warning system that a lot of others just don't have. And it really comes down to this core idea. People often call the bond market the smart money for a reason. When things start to get shaky in the world of corporate credit, that's a huge red flag that stock market investors need to pay attention to. Trouble often brews there first. So Finstill goes way beyond just looking at junk bonds. It actually pulls in these super sophisticated indicators straight from the Federal Reserve. Things like the National Financial Conditions Index. These are broad, powerful measures of the entire financial system's health. Think of it like a check engine light for the whole economy. This is all really interesting, but let's get to the important part. What does this mean for you? How do you take this number and turn it into an actual, actionable idea for your own investing? All right, here are the zones to watch. That big middle chunk, from about 20 to 60, is kind of neutral territory. The real action happens at the extremes. A score under 20 screams extreme fear, and historically, that's a potential buy signal for contrarian. A score over 80, though, that signals extreme greed, and that's when you should probably be a little more cautious. I love this way of thinking about it. The index is like a contrarian's compass. It's not all that useful when you're just wandering around the middle, but when you get to the extreme north or south pole of emotion, that's when it becomes an absolutely essential tool. So, let's say the index is flashing extreme fear. Here's a possible game plan. First, don't just buy anything. You need to have a shopping list ready of great companies you'd love to own. Second, don't go all in at once. Scale in slowly. And most importantly, focus on those really solid companies that just got dragged down with everything else in the panic. And on the flip side, when the market is in extreme greed, this isn't about selling everything and running for the hills. No, it's about playing smart defense. This is the time to tighten up your stop losses, maybe take a little profit off the table on stocks that have had a huge run, and just build up a little bit of cash. Okay, you ready for a more advanced tip? Because it's not just about what level the index is at, it's about the direction it's moving. One of the most powerful signals is when the market starts to transition out of fear. This is called the fear-to-neutral crossover, and it's a fantastic pattern to watch for. When you see the index has been down in the dumps below 30 and then it punches back up through 40, That can be a really strong sign that the worst of the selling is over and a recovery might just be starting.
And you know what the best part is? You can track all of this for yourself. The live FinStill Fear and Greed Index is totally free to check out. Just head over to fffinstill.com. You can see the daily score, see how all the components are behaving, everything.
And hey, if you found this useful, make sure you follow us. We're putting out more explainers just like this one, all designed to help you invest smarter.
So, I'll leave you with this one last, really important question. Right now, at this very moment, is the market feeling fearful or is it feeling greedy? There's only one way to find out.